Paycheck Money Budget Routine. Welcome to Money Matters Pro, the channel where we decode the complexities of personal finance, helping you navigate the path to financial prosperity. In today's video, we're unveiling a comprehensive guide, 14 essential steps to master your finances. Whether you're a seasoned investor or just starting your financial journey, these steps are your roadmap to financial success. Let's dive in and empower your financial future. Step 1. Find your financial baseline. Identify your financial baseline by meticulously tracking your monthly expenses. Utilize a spreadsheet to list and categorize all your essential and non-essential expenditures. The goal is to understand the absolute minimum you need to survive each month. By knowing your financial baseline, you can make informed decisions about spending and saving. Step 2. Build your emergency fund. Imagine having saved up to 6 months' worth of expenses in your bank account. An emergency fund is a financial safety net for unexpected situations such as job loss or unforeseen expenses. Calculate 6 times your financial baseline to establish this fund. It provides peace of mind, ensuring you're financially secure in times of crisis. Step 3. Tackle high-interest debt. Prioritize paying off high-interest debts such as credit cards or car loans. 2 effective strategies are the avalanche method and the snowball method. The avalanche method focuses on paying off the highest interest rate debts first, while the snowball method targets the smallest loan amounts initially. Choose the approach that aligns with your financial goals and preferences. Step 4. Prioritize retirement accounts. Start contributing to your 401, especially if your employer offers matching contributions. This workplace retirement plan not only provides an opportunity for free money, but also lowers your taxable income. By prioritizing retirement accounts, you lay the foundation for long-term financial security. Take advantage of employer matches to maximize your benefits. Step 5. Contribute to Roth IRA. After maximizing your employer match with the 401k, focus on contributing to a Roth IRA. Unlike the 401k, Roth IRA contributions are made post-tax, but the earnings grow tax-free. This account offers flexibility, allowing you to withdraw contributions at any time. Utilize the benefits of both retirement accounts to diversify your investment strategy. Step 6. Invest with a taxable brokerage. Consider investing in a regular taxable brokerage account. While lacking specific tax advantages, it provides a versatile platform for investing excess money. Diversify your investments based on your risk tolerance and financial goals. Platforms like Moomoo offer opportunities to invest in low-cost mutual funds for long-term growth. Step 7. Embrace dollar-cost averaging. Implement a disciplined investment strategy by utilizing 7. Embrace dollar-cost averaging. Implement a disciplined investment strategy by utilizing dollar-cost averaging. Invest a fixed amount consistently, irrespective of market fluctuations. This approach minimizes the impact of market volatility, allowing you to accumulate more shares when prices are low and fewer when they are high. Over time, it results in a lower average cost per share. Step 8. Automate your finances. Streamline your financial management by automating key processes. Set up automatic transfers for your paycheck, directing funds to different accounts for spending and savings. Automation reduces decision fatigue and ensures bills, savings, and investments are handled seamlessly. By establishing a structured financial automation system, you free up mental space and time for other aspects of your life. Step 9. Prioritize time management. Recognize the value of time as a precious resource. Identify tasks that consume your time and evaluate their opportunity cost. Consider outsourcing tasks that hinder your productivity, allowing you to focus on activities with higher returns. By optimizing your time, you can enhance your overall well-being and create opportunities for personal and financial growth. Step 10. Embrace financial automation. Simplify your financial routines by incorporating comprehensive automation. Ensure your paychecks are automatically deposited and set up automatic transfers for fixed monthly bills and essential expenses. Designate a savings account for surplus funds, aligning with your current financial goals. Automating these processes reduces manual effort, minimizes errors, and fosters consistency in your financial approach. Step 11. Cultivate financial awareness. Stay informed about your financial standing by regularly reviewing your accounts, investments, and overall financial health. Embrace a proactive approach by assessing your progress, making adjustments as needed, and staying attuned to shifts in your financial landscape. Cultivating financial awareness empowers you to make informed decisions and adapt to changing circumstances effectively. Step 12. Pursue continuous learning. Incorporate a commitment to ongoing financial education. Stay abreast of market trends, investment strategies, and personal finance developments. Continuous learning enhances your financial literacy, enabling you to make informed decisions about your investments, expenses, and long-term financial goals. Step 13. Regularly reevaluate goals. Periodically reassess your financial goals, taking into account changes in your life, priorities, and economic conditions. Ensure your goals remain realistic, measurable, and aligned with your aspirations. Regular evaluations enable you to adjust your financial strategies, allocate resources effectively, and stay on course towards achieving your objectives. Step 14. Seek professional guidance. Consider engaging with financial professionals, such as advisors or planners, to gain personalized insights. Professionals can provide tailored advice based on your unique circumstances, offering strategies to optimize your financial portfolio, reduce tax liabilities, and plan for major life events. Seeking expert guidance enhances your financial decision-making and contributes to long-term financial success. Thank you for joining us at Money Matters Pro. If you found value in this guide, don't forget to hit the like button, subscribe for more insightful content, and ring the notification bell to stay updated. Mastering your finances is an ongoing journey, and we're here to guide you every step of the way. Until next time, stay financially empowered.